I am down $2,000 on this dividend stock that is currently paying out a 13% dividend yield. Is this a trap, and should I be selling it? Let's jump right into it. Welcome back, my passive income investors alike. A lot of us like to talk about all the money we make on our good positions, but I want to take a look at my worst performing position. Should I be holding on to it? Should I be selling it? Let's head over to the computer and find out. Well, my passive income investors alike, we can't win at them all, and we can't just gloat our winnings. We also have to look at our worst performing companies within our portfolio. So in my tax-free savings account, this is my worst stock of 2019, and in fact, one of my only red stocks, down $1,900 US, minus 36%. My average buy at $22, where the price currently sits at 14. I own 241 shares, or the equivalent of basically when I bought it, 5,300 US. And this company has just been on an epic downturn, and it is also one of my most heated positions where I get the most criticism for this purchase. And we're going to take a quick look into this company. If you've never heard of GEO Group before, it is in fact a REIT, and it is one of the most fascinating REITs considering it's paying out a 13.73% dividend yield right now, which is higher than the average weighted return of the major indexes. This company is a prison stock. It is a very fascinating prison stock and one of the largest private prison companies in the US with global exposure, which we'll take a look at right now. So this company does US secure services. Not 100% sure what that means, as it makes up their biggest segment of their REITs. We've got international services making up 7,600 beds. We also got residential reentry, also a massive part of their company. And we got non-residential. These would be like your murderers. They don't even tell us how many there are, but there's 66 facilities. So this also has to be one of their largest segments, along with US secure services. And then we got a little bit of youth in there as well. This company has got a massive amount of global exposure, and it is the ugliest real estate, might I say, you would ever see if we started taking a look at some of these beds. But we got some going on in Africa, and if we scroll all the way over to way down under, yeah, that's right, in Australia, we got a bunch of new facilities going into production right now as we speak. So this comes down to a lot of moral foundations, guys, but let's take a quick look at the books and then decide whether I should be selling this company, maybe leveraging down. And I also want to know what your opinion is in the description box below. But jumping in here, guys, we're looking at a company with a $1.7 billion market cap, which has come down substantially, I'm sure you can imagine. A dividend yield of 0.48 cents or 13%, and a current PE ratio of 10.35. So let's just jump right into the fundamentals here real quick and see what's going on. So first of all, the thing that I like to realize is that their earnings are $2.74, and their dividend is $1.92 a year. So we can see that they're paying out, I think it's about a 0.7% of their total income out to shareholders, which means they're not taking out debt to actually pay that dividend, which is a very crucial thing when it comes to REITs, because some REITs will actually take debt out to keep their dividends up, even though their cash flows are dropping or they are down. So let's just jump right into the balance sheet. Actually, you know what? Before I reveal the balance sheet, maybe we'll take a look at cash flows first, because this company has actually been able from 2015 to increase its net income. But the most fascinating thing is if we scroll down the cash equivalent and year, they managed to increase their cash on over year substantially, and they've actually been growing their overall revenues based off the fact that more people are getting incarcerated and the US government is dealing with people coming over from Mexico. But the thing that matters the most to me, and the most fascinating thing of this company, where I find it most attractive at these levels, is the fact that if we take a look at their total assets sitting at $4.2 billion and their total liabilities sitting at $3.2 billion, and we minus those out, we're sitting on roughly $1 billion in cash, which is $700 million away from their actual underlying assets. So you're paying less than 2 times their underlying assets, which is something absolutely fascinating that I find really attractive in a balance sheet. But why is this company dropping so much? Well, if you haven't heard, a lot of the political uprunners, including California, is shutting down their private prisons. They no longer want to deal with private companies, and they want to retake control. The reason they actually allowed the private sector back in the 80s to take over the prisons was because they couldn't handle the mass influx of incarcerations. So they allowed the private sector to take over. And recently, we've been seeing a lot of backlash and a lot of hate, including some political uprunners, including Elizabeth Warren and Andrew Yang, talking about unprivatizing and canceling these contracts. But what people don't realize is some of these contracts are very long lasting and are going to be around for a very long time. But the GEO Group Inc., there's a lot of news coming out now about the attractiveness of these companies. And if if you're one of those people that have a moral problem making money off prisoners, well, a lot of the news that's come out has been fake. If you go into their actual investor relation page, or you go into basically the news and you look at the current last reports and you listen to the dialogue or actually listen to the conference calls, a lot of the stuff that's been beating them into the ground has been actually fake news. And they are actually regulated by ICE, the ICE, which essentially is the government that regulates the terms and conditions of how they run these prisons. So I suggest you take a further look into it. And as I look at my position being down $2,000, being the worst stock I've bought in this year, I have been really sitting on the fence on whether I want to finalize the position now and go ahead and take money out of my RBC account and dump another $1,500 into this, getting a 13.73% yield, which they can sustain easily for the next 3 years. But where the real trouble in lies is if they can't get refinancing. They have been neglected by a lot of their financiers, including some of the biggest banks like JP Morgan, leading them to maybe take on higher interest rates, which I think they currently got a loan at 4%. They're not getting the best current interest rates with the current political volatility that brings to this company. So what do I see going on into the future, guys? Well, this company's going to have a lot of volatility heading into the next election cycle, and it really resides on, how much of the political uprunners can take into this company, because they're going to be the ones beating it into the ground and removing a lot of basically what they're going to be capable of doing into the future. So if you're buying this company, I promise you right now they can afford this 13% yield, but the real trouble is going to be coming into the future, guys. This isn't new news to this company either. In fact, back in 2015, 2016, leading into the last US election, this company took a big hit based off similar news, only to re-rally back. But if we take a look at the actual charting, we can see that over its entire history, this company's rate of return has been absolutely phenomenal, including dividend increases over time. The question is, can you stomach the volatility? And do you think this company is going to be able to sustain through what the government is, through a lot of the political uprunners saying that they want to unprivatize these prisons? So let me know what you think in the comment section below. Do you think I should be buying? Do you think I should be selling? I'd love to know what you think, guys. This has been a very interesting company that I bought this year, and I don't know exactly where I plan on going with it, but I do plan on holding it long term. I do believe in the outlook of the company. I just don't know how much exposure I want to such a high-risk REIT. If you further want to learn about stocks, consider Passive Income for Dummies. The link in the description below. It's a website we recently launched with our private chat groups and everything else in between. So stay cool, stay awesome, guys. I'm losing my breath. I look forward to chatting to you tomorrow.